Sorry, Boxy. Morning, Trade Pros. Hello. You guys are here for a great morning market update for this beautiful Wednesday. Today is oil inventory day, and we got a lot to talk about. So first, I'm making a huge announcement about Trade Pro Academy and our business operations. This is something that a lot of you have asked for, and we've long resisted, but we realized, you know what? Rather than resist, there's an opportunity. So we're actually launching a signal service. All right. We'll give you guys exact entries of where to get in, where to put your stop loss. We'll basically give you the trade. You don't have to do anything but breathe and execute it. Oftentimes, these entries are actually below the market price. You're going to get such a good opportunity. All right. So we're starting a signal service. We'll tell you exactly what to do with your money. All right. And the best part of this whole thing is it's going to be absolutely free. We're not going to take any commission, any profits, nothing at all. All right. And you could start with $150 and you'll turn it into 1 million USD, guaranteed. Right. I guarantee it. 100% guarantee. All right. Because there's no shortcuts in life, guys. We know that. But there are in the markets. We have the holy grail and we're going to share it with you. Damn it. Huge announcement. I'm super excited. All you have to do is tune in to our webinar that's coming up. We'll get your account number. We'll actually put the trades for you. Options, futures, equities, everything. Exciting or what? More details coming. Never. April Fools. Gotcha all. Woot, woot, woot. Somebody fell for it. Come on, guys. You're not supposed to know. I guess everyone this morning's on edge and expecting it. It's April Fool's joke. We will never provide a money management. Angela was outright stunned. We'll never do that, guys. No one cares about your money more than you do. In fact, I even had a line in there that said, we care about your money more than you do, obviously. But I was like, you guys would immediately know what's going on here. Victoria and Mark in the webinar are probably like, I'm quitting. How come I didn't know about this before? I thought I'd have some fun. I'm sorry, I couldn't resist. We're not doing signal services. You're not going to turn your $150 into $1 million, guaranteed, but you could. There are no guarantees. You know, you guys know the harsh reality of this business. Let's go with the morning market update now that I got you. All right, quarter end rebalancing is over. Institutions who had been looking to buy equities and sell bonds. Will almost called us on it, William Craig. We had some good fun. All right, institutions who had to buy equities and sell bonds are now accomplishing that mandate. It's over. At the end of the quarter, we ended quarter one yesterday, by the way. We're now in the first day of the second quarter 2020, and boy, what an end to that quarter. All right, so what ended up happening is there was a lot of buying of equities. If you imagine being long 60% equities, long 40% bonds, that's what you promise your investors. When equity prices dropped, you're underweight. So you have to sell the bonds you're now overweight because they've gone up to buy the equities. So they rebalanced the portfolio. But there was also news that a lot of institutions weren't rebalancing. They said this is a temporary situation. We could actually go in this situation and be underweight equities for a longer period of time as long as we don't like them. So that kind of disturbed the market. All right. So here's the situation. In addition to this, stock companies are now saying they're not buying back their own stocks anymore. There's no more buyback programs, especially from the banks. Some banks in Europe even discontinued the dividends. All right. And so it might be time to start retesting these lows. We ended the quarter on a pretty bearish or bullish note. We rebounded quite a bit. But I think that as we go into this new quarter, I think we're going to start out bearish like we are today and maybe even retest these lows. All right, so where do we go from here? Risk off sentiment is seeping into the markets right at the end of the quarter. We knew that would happen. All right, we said there's going to be a rebound. We expected 2,700. We damn near got there. Now we're pulling back. All right, traders are deciding where the next stage is going to be. You're not seeing a lot of institutional money actually jump into the long position. So it's not like this dip is being bought. Otherwise, we would have seen it. Institutional traders can't hide because they have to report their trades. And they would have shown up on the reports as big buyers, but they weren't. They were, in fact, hedging more, all right, reducing some of their hedge exposure on the S&P, but they were not buying into the long side, all right? Miro, wherever you wired that $150 to, it's gone, bro. You should have read the disclaimer before you wired the money. You should have read the disclaimer. All right, so where do we go from here? I think downside. I mean, S&P is down 3% today. Dow futures are off more than 600 points. All right, Donald Trump yesterday said it's going to be a very few painful weeks. He first said in the address it's going to be a very painful 2 weeks. Then at some points threw in 3 weeks, and then at some points even said 4 weeks. So it's going to be a very painful 2 to 4 weeks is essentially what the gist of that blurb was. White House is expecting 100,000 to 240,000 deaths from COVID-19. Hang on. I've been talking on the computer mic. Sorry, guys in the room. It's probably terrible audio. I'm wearing this headset. It's doing nothing. I'll hook it up in a second. All right. The Dow's recorded its worst quarter since 1987 in Q1. All right. And the S&P has logged its worst quarter on record in the history of the market. So even though we ended the quarter on a bounce back, it was a terrible one. And I think it's going to get retested, or at least there's going to be some more selling coming in early quarter. Now, the question is, will the selling take out the low? If we sweep out the low, we're back down the downside. It could get ugly once again with halts, limit downs, those kind of scenarios. You've experienced them already. If we don't break the lows, we could be in for a wider, longer bounce back. And if coronavirus F's off, that's not a very political or technical term, but if coronavirus just gets out of here and ships itself out, then we have a chance for this to even be the low. So the next week to 2 is transitional. All right, a lot of economic data points are coming in as well that'll help steer the ship for a lot of the investors and portfolio managers. We have to look at that same info. All right, in today's news in Asia, Japan's down 4.5%, Hong Kong down 2.2%, China down 0.6%, while India's down 4.1%. All right, in Europe at midday, London down 3.6%, Paris down the same, Frankfurt down 3.2%. And in the U.S., Dow and S&P down 3%, NASDAQ down 2.6%. Crude oil this morning's down 1.2%, trading at as low as $20 even a barrel. We did not break the 20. Yeah, pretty darn close. All right. Today marks the end of the agreement by the OPEC and its allies to do a production cut. That started all the way in 2017. All right. Until now, there's a production cut environment. It is now officially over. Saudi Arabia has said they're boosting their output to 12 million barrels a day from 10.5-ish before. It's a still significant boost, 10%. And the only reason Saudi Arabia won't boost more than 12 million is because they're pretty much at their production capacity. It's like turn on the well and get out of the way, let this thing pump. And that's what they're doing. All right. Other major producers like Iraq are also planning to increase. Russia said they do not intend to ramp up their production. It would be very much like Russia to say that and ramp it up anyways quietly. All right. There's no doubt there. It's at the moment, it's a battle for these OPEC companies to get back into influential position. All right. U.S. shale has taken over as the number one producer. The goal of this whole price war is so misunderstood. I sent an email about this yesterday. The goal is not for Saudi Arabia to crush Russia. All right. Both of them could produce cheap enough that they could sustain this downside. The goal is to take out U.S. shale production, all right? That's been the goal. I mean, I'm sorry to say it. The goal is to eliminate U.S. shale production so they can recapture market share and for OPEC to get control again because they lost it, all right? They became irrelevant when the number one producer wasn't even in their cartel. So that's what we're seeing in oil. I'll leave it to Boxy. I think that I opened up probably a wormhole here. He's going to go down. Can't wait to hear it. Or maybe not. All right, so we're at $20 a barrel. At the same time, what's factoring in oil being so bearish is the fact demand is next to non-existent. Everyone's home. All right, if they're home, they're not driving. If they're not driving, they're not putting gas in their car. If they're not putting gas in their car and driving to buy stuff, companies aren't selling things. If they aren't selling things, they don't need transportation costs to ship around these goods. All right, so it really becomes kind of a snowball effect where there's huge lack of demand in crude and a massive oversupply. Is it time to buy crude? I just sent an email this morning. And my whole thing here is let's day trade it. I've tried a small position on a swing trade basis, meaning that if it recovers up until October with options, I've taken a play and I'll add to it when I'm right. I'm not going to add to it as it drops. I'm going to add to it as we get back to break even on that position, add to winners, cut the losers. All right. It's not a big position. It's a feeler position. Put something out, sprinkle a little bit, see what happens, go from there. Right? When you go all in or all out with your trades, you're putting too much pressure on a binary decision that you don't know about. You have no idea, right? Well, if you did know where the market was going to go, you'd be selling services or signals. You wouldn't even be selling signals. You'd just be trading them yourself and making a fortune. and then extracting every profit, every dollar profit out of the market. The fact we don't know is our opportunity in these markets, right? Not knowing where price is going to go is a blessing, because then this market works. All right, gold's up 0.7%, Bitcoin's down 2.2. This morning we had some interesting numbers coming out of the ADP jobs report. ADP is a payroll company, but on Friday, on Friday, 2 days from now at 8:30 in the morning, we're going to see the latest non-farm jobs report. That one's huge. That's a monthly basis for the full month of March. Everyone is tracking along, looking for that. We're going to be trading it in our elite room, this week at 8:15. We're going to preview the report and then trade it as soon as it drops on the newswire. ADP, though, is a precursor of that. ADP this morning came out at minus 27,000 jobs for March. The market and newer traders shrugged this off and said, hey, it's less than the minus 150. This is good. It might be negative, but it's not as negative as we thought. And then you realize that the data ended on March 12th. The data being reported is just half a month. The full impact of the virus happened after that. And so in this situation, you would leave us that quickly? Well, come on. I'd expect a fight from you. In that situation, I'm thinking that this report gets shrugged off. It doesn't matter that it's less negative than expected, which makes it slightly positive. I think the market doesn't care about this at all because it's only the first 2 weeks, and that's irrelevant. All right, things really started to get haywire around that period. All right, so today we have at 9:45 PMI manufacturing index. We're expecting to see that be weaker. ISM as well, and construction spending at 10 a.m. top of the hour. And then 10:30 we have the crude oil inventories report. We trade that live in the room every day. Not every day, every week on Wednesday. There's huge opportunity. This is your time to experience it. Come on out, join us. Trade it with us today, and you have the 14-day money-back guarantee. I've always put that. Out there. Yeah, Mike, I did get a haircut, but I cut it myself. Mike, look at this. It's not going to look good now because I've been wearing a hat. And I'm not wearing the hat because I have a bad haircut. I'm just wearing the hat because I like the hat. And I don't usually wear hats. So I cut my own hair. Sometimes you got to get thrifty, Mike. I'll cut yours too. We'll go on camera and I'll show you where to cut, and then you just do it. All right. Haircut service is being launched too. That would have been a good April Fool's one too. You're irrelevant, kind of stupid. All right, love you guys. Be careful out there. Manage your risk, trade like a TRADEPRO. Don't send no $150 checks. It's April Fool's. There is no shortcuts. There's just the path to your journey, and we look forward to being part of it. I love you guys. Be safe out there. Be careful, and have some fun today. Laugh at some stuff. We need some relief being cooped up at home. All right. Yesterday I watched what's it called, Tiger King on Netflix. Man, that thing was like a car crash. It's like it's bad, and you shouldn't look, but I was sucked in, and unfortunately that's why I'm tired this morning. It's so stupid. What a bad excuse. But I got caught in it. So here I am. Now we're going to trade a little bit tired for no good reason. I love you guys. Be careful. Let me flip it over to Boxy because I'm kind of getting wordy on this. Take care, YouTube. See you later and have a fantastic day. Ciao. Boxy, over to you.